Are we in a bubble? As we enter into a momentum market, should we be fearful now that the market is in extreme greed? For this week, let's take a look at the top 10 Philippine stocks based on their current technical strength scores. Let's discuss. My name is Den Slim, and welcome to another episode of Monday Market Outlook. Consumer spending in the Philippines is expected to grow by 5.5%. This, according to First Metro and UANP analysts, will help boost the economy to grow by 6% in 2024. Credit card loans, vehicle loans, and salary loans also saw significant increases. And if consumers are going to start spending, let's take a look at some of the consumer stocks in the Philippines and see how they performed in the last 4 years from October 2019 to October 2023. GSMI, Ginebra San Miguel, on top from sales of a 200-year-old product, right? We have Emperador on the second spot, so we really do love our alcoholic drinks. The pandemic may have helped drive sales, but it's worth noting that they were also able to maintain sales post-pandemic. Now, disappointing numbers from RRHI, URC, and DNL, but are they poised for a rebound in the coming years? If we look at the numbers in terms of their compounded annual growth rate of their operating income, JFC is on top, followed by SSI and GSM. Campi reported last week healthy vehicle sales with a 15.5% growth rate for January compared to January of last year. Toyota again leads the list with 16,093 units sold this January, which is up 19.8% on year. In other words, Toyota actually gained market share. So it looks like GT Cap through Toyota Motors may be set to post healthy profits in Q4. In terms of air travel, 45 million passengers passed through NAIA last year, which is a 46.5% gain from previous year, but flights are only up 27%. But this is good news, as the smaller increase in flights compared to the passenger growth means that there were better efficiency for airlines. If we look at the destination, we can see that international travel has grown faster at 22% compared to domestic travel. So it may not be only PAL and Cebu PAC who will benefit from this travel boom, but also those who will serve meals, especially in international flights, which includes Macro Asia. So let's look at the PSEI charts. The index closed the week again close to our 6,900 critical level, ending slightly above at 6,913. So the market gapped down from 6,960 on the mark on close last Friday. So we could open this week at around 6,950, but nevertheless we are up 0.4% from last week. So far, the market is strong. If we switch to the 2-hour charts, we can clearly see the strength as we continue to track along the 20 EMA line. And if we see that, we can see what looks like a breakout, albeit briefly, of the 6,900 resistance. And as we open around 6,950, if the price action maintains at these levels, this could be a sign of strength, and this will push the markets up back towards 7,000 or 7,100. So let's go back to the daily charts. If we break back into this area, so this could mean a sign of weakness. We will most likely retest 6,800 here. So let's put some lines. We may retest 6,800 here, which also converges with the 20 EMA. So hopefully we do maintain the markets above the 6,900. As we've experienced some strong technicals, let's look at my top 10 Philippine stocks in terms of their technical strength scores. At number 10, we have CREIT. It's consolidating nicely along the 20-day EMA. Our next level to watch here is at 274 and see how it reacts there. A good entry point would be a pullback to 263 or 260. Right? At number 9, we have DMC. Right? A pullback to 1086 could be a healthy correction, and hopefully we can move towards the 1184 price target. Watch out for their dividend announcement, which usually occurs around first week of April. At number 8, we have SM. SM is tracking along the 20-day EMA. Hopefully, it will be able to retest 948 and breaks out of that. The next level, if ever, would be 1020. At number 7, we have Metrobank, right? A nice breakout of the 5970 resistance here. Watch out for its reaction at the 6170, 6275 zone. Dividends were declared at 3.5 pesos per share, ex-date on March 7. So expect some volatility. Expect a possible retrace of Metrobank on March 7. Number 6, we have SSI. This could be a head and shoulders formation, and if so, the next price target would be at 345. If it breaks out of 345, the next zone to look out for is 373. At number 5, we have BPI. We have a nice rally here to the 120 price target. If it breaks out of 120, the next zone to look out for is 124. At number 4, we have Pizza. So far, tracking well along the 20 and 50-day EMA. It has been on an upward trend since 2023, actually. I like Shakey's, I like the food, but I don't like the stock that much because of its very low trading volume. At number 3, we have CNPF. CNPF moving along this price channel. Let's see if the 20 EMA and the horizontal line support holds. If not, it may revert back to the 50 EMA along the lower band of this price channel, and hopefully a bounce could be a good swing trade opportunity with a price target of around 39. At number 2, we have BDO. A healthy pullback here to 153.6. Hopefully we can recover and resume the rally towards 159 to 162 and see how it reacts at these price zones. And the number 1 technically strong stock is ICT. Despite analysts' price target of around 260 to 270, ICT has managed to reach 290. So the trend is still intact, and a quick consolidation along the 280 area here could push ICT back to 290. Eventually, 300 would be a good next psychological resistance point. So on to the global markets. Nvidia stock climbed 16% after the spectacular revenue growth of 265, easily beating Wall Street expectations for earnings and sales. And CEO Jensen was also able to address the sustainability of its growth, sending Nvidia's market cap to new highs. The $277 billion gain sets the record for the highest single-day market cap gain in the history. So this sent the S&P 500 to new highs, closing the week at 5087. The 20-day EMA continues to hold here. We can only expect the markets to grind its way to the next 50-point level, which should be around 5120. So we've entered into what looks like a momentum market. Now, if we look at the S&P 500, we see that it usually tracks the movement of the expected rate cuts and the 10-year yields. But as we can see in the last few weeks, the S&P 500 has detached from these economic fundamentals. So this is the S&P 500 inverted, just to show how it tracks closely with these indicators and how it has detached in the past few weeks. And usually when the markets move based on momentum rather than fundamentals, people say that it can mark a start of a bubble. So are we in a bubble yet? And if we look at the current situation and compare that with previous bubbles, it still looks like we are at a relatively safe level at around 0.7x. But we'll see, right? People have been saying that the Mag 7 has really been the one driving the stock upwards. But many market watchers, including me, disagree, as I think that market breadth is way better than most credit it for. Now, if we look at this chart, the S&P posted its most new net highs last Friday for 2024, which is actually a significant improvement in market breadth. No? And if we look at the Zweig Breadth Trust, the 2023 Breadth Trust is almost due for its 252 days, and it's usually 93% positive by around 20.9%. The last November's Zweig Breadth Trust has yet to reach its 126th day, but it already has a 15% return, no, in the 63 days since. So we are most likely to see continued growth in the markets in the next few months if we are to believe the historical trends. Now, looking at next week's economic calendar, GDP growth rate estimates on Wednesday, and the PH budget balance on Thursday, along with core PCE and PCE numbers for the US, as well as personal income and personal spending numbers. On Thursday and Friday, we will have manufacturing numbers, PMI, for both the Philippines and the US. The Producers Price Index for the Philippines also on Friday. So we are not expecting a lot of surprises next week. So it's a good time to enjoy the momentum while it lasts. As we enter into March, remember that there are still indicators, that there are still risks that the US economy will enter into a recession. But in the meantime, enjoy the ride while we can. Price action still says and still indicates that it is a buy the dip market. And again, risk management is key, right? So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly, and I'll see you again next week. Bye-bye.